On today's episode, we talk about how Uber and Lyft are affecting the car loan industry. All right, so today we're going to talk about Uber and how it's impacting loans, cars.
The auto loan industry.
Yeah. How it's impacting everything in
The
general.
industry, yeah.
So what do you think? How is it impacting? And it's pretty early to, like, since Uber and Lyft and all of that started. So there are things that we haven't even seen yet.
Yeah.
Because you need the cars to
go through everything.
And even the market to adjust to some things.
Well, the main thing, the reason why I thought this was a pretty good topic is because in reality, and the way I see it, the people financing a car with the purpose of driving for Uber and Lyft.
Right.
Even though I don't think it's the best decision, but that's a whole different topic. I think it's creating a bubble in the auto industry, just like it was. We had one a few years ago. The reason why is because when lenders they issue the loans, they have a prediction, based on the history. Estimated miles that the car is going to be driven and all that.
Which is about the industry average.
It's 15,000.
Yeah, about
average.
15, 20 maybe.
If that
you average on a miles
year.
On a car a year.
If that, I think 20 is a lot.
Yeah, that's what we
personal
know.
use. Yeah.
That's what we know as of the history. That's what
Yeah.
it has been. But now,
people driving for Uber and Lyft, they're putting probably like 4 times the average miles. They're maybe even 100,000 miles in 1 year, like
Look,
50, 60,000.
So I have an article here that it says that a full-time Lyft and Uber drivers can easily put more than 1,000 miles a week.
Wow. That's a lot.
To a vehicle. So that's a lot. And if you think about it, I mean, I'm not 100% sure on how it worked before Uber and all of that with like taxis. But I mean, I'm sure back in the day, it wasn't the same insurance for a taxi that for a normal person. It wasn't the same.
Yeah.
Like a bunch of stuff were higher for taxi drivers because there's more risk. They're going to be in the streets anymore.
Well, some states now require the insurance if you do Uber, Lyft.
Right.
It's an extra coverage.
Right.
Because everybody's adjusting, you know what I mean?
Yeah, that's what I meant when I said that the market hasn't adjusted yet
Fully.
And we see that from the back end. We give out loans to the people on a car. That loan was calculated probably on a depreciation of the vehicle. Normal
personal
normal use
car, yeah.
15,000 miles a year.
Yeah.
But people are putting way more than that.
Look, there is no problem if the car gets paid off. That's the thing. If the car gets paid off, I mean, the bank is completely fine.
Right.
But if the car gets repo, the money that the bank has in the car, it's a lot more than they expected compared to the value of the car, because obviously it's going to have way more miles than they expected.
Yeah.
And that's a loss. That's a big gap.
That's
money wise.
That's
creating a bubble.
The depreciation, it's increasing.
It's accelerated.
Yeah.
It's a lot faster.
So it becomes a problem on that, like if there's a repo and the bank is with a car that has a lot of miles, And the other time that it becomes a problem, and this is not a problem for the loan or for the bank, but for the actual customer, is when they want to trade in that car, which we have seen it. Um, you want to trade in a car after a year of use, but you already put 70,000 miles on the
Yeah.
vehicle. So what you think the car's worth,
Not even
it's
close.
not. I mean, if you are an Uber driver and you're putting 70, you bought a car, you used it for Uber for a year, you put 70,000 miles, and you are trying to trade in that vehicle after a year, it's pretty much impossible
You're gonna be
because
way upside down.
you reduce the value of that vehicle in that year dramatically.
6 times
Yeah,
more than
a lot.
expected.
So it's gonna, if you're buying a car to drive Uber, Lyft, whatever you're doing, it's gonna take you longer to be able to trade in that car if you're even able
Yeah.
to trade in that car.
Yeah. Yeah. So that's people don't realize that, but I think that's a huge problem. Which in reality is just creating a bubble. If 30% of the people financing a car gets repoed, because they're on paycheck to paycheck. People driving Uber and Lyft, they live paycheck to paycheck. If something were to happen to them, let's say 30% of the people cannot make the payment to their lender and they get repo, that's going to impact the industry a lot. Because, the lender's thinking that the car's value is this, but in reality it's 3 times less or 4. I don't know the exact numbers,
Right.
but that's what's happening. When they sell and send the car to the auction to get whatever money they can get for, it's going to be way less than the money they have in it. And
Right.
that's going to create a big loss. And that's creating a gap in the industry, and
Yeah.
that's a bubble, at the end of the day, because then the lenders will not survive. They'll write it off, and someone, is going to pay.
Someone's
for
gonna
it.
have to take the hit.
Yeah, exactly. And the whole industry is, you see everybody, man, driving brand new cars, driving for Uber and Lyft. And I don't know how good their credit is, but I'm sure it's also not very low interest. I'm sure you see everybody, all kind of stuff, but I don't know. That's a big concern in my opinion.
I wonder, have you checked? I know even Uber, they are renting cars for people to drive.
They are, yeah.
I wonder what the terms are, and like, I'm guessing it's gonna be a higher payment than if you're
Yeah.
just getting a vehicle normally.
Because they're calculating that.
They have to.
They're expecting, they're obviously know the car is going to be used for Lyft and Uber, so. But I've heard, I don't know exactly what are the terms. I've heard about it, but I'm sure it's going to be a lot higher than a regular auto loan,
Right.
because a regular auto loan, like I said, all the risk involved is already calculated based on a personal use. But if you're putting 5-6 times more on the miles, it's throwing everything off, everything that the bank is expecting.
Yeah.
It's a huge problem in my opinion.
I guess the way to what banks should do is do what leases do, that they put a cap on miles that you can drive a year
Yeah.
or something like that. But
I just think the banks don't know what the car is being used for.
right.
You know what I mean?
But you have no way to know.
You can, yeah, but
People,
yeah, that's
people
true.
will lie.
But that's the thing, I think that's what's missing. Like, if I'm the lender and I know, I'm loaning this amount of money on the car, and I mean they have to have really good credit and know that I'm gonna get paid back. If not, it's not gonna be a big loss, you know. Um, yeah, so that's the big concern.
Yeah.
And so what do you think? I mean,
I've heard I I've heard about people, particular people like you and me. Uh, they will buy vehicles. They will buy 5, 10 vehicles, whatever they can afford, and they will lease it to people that want to do Uber. Uh, but of course, it is more what I've what I've heard is like a regular Toyota Corolla or something like that, a normal car, not new, used with a few years, and they will charge you like 700 or something like that a month because they know you're gonna be
over the miles.
yeah, you're gonna be using it for Uber. That's the whole point. So in that case, they are taking into account the fact that you're gonna be putting a lot of miles, that the depreciation on the car is gonna be higher. So that's what it needs to happen,
Yeah,
which is not gonna happen.
yeah, but
It's not gonna happen until we get a big hit
yeah,
from the economy and people have to open their eyes and be like, not people, but like the financing companies.
yeah.
I'd be like, shit,
Yeah,
this is
just
really not worth what we
the
thought.
collateral, you know, their assets is just losing value drastically.
By the way, we're not financial advisors or anything
Yeah.
like that. We are only speculating. We don't know about markets or anything like that. So
But it's common sense.
yeah, we're
Very
just
common
yeah,
sense.
it's common sense, but doesn't
Yeah.
mean that there's a crash happening or something.
Who knows, man? Who knows? But I think yeah, that this, you know, the right sharing Uber Lyft is affecting everything, you know, and the industry, the industries, not just the auto industry, but all the industries related to that
Insurance,
hasn't made, you know, hasn't adjusted yet.
car sales.
Car sales, because look, if someone is driving for Uber and doesn't have the appropriate coverage, also there is a problem there as far as like the car getting paid off. If it's a total loss, there are a lot of like gaps there,
Right.
gaps that have, you know, haven't been filled just yet because you know, related to loss policies, you know, all this kind of stuff. So it's a lot of things
Yeah.
related, you know.
Mainly the biggest problem that I see in the whole thing is uh, the lending of the money. That's where the hole is or the problem is. Because exactly what you said, if they get in an accident, who's going to get hurt there? The people who's financing the car.
Right.
And I guess the customer, his credit maybe, like if
Well,
they don't
yeah,
pay
if
off the loan or something like that.
it
But,
remains on your credit,
right.
a balance.
So I guess the customer, whoever is lending that money, are the ones that are gonna get affected the most.
Just how it happened back in the day, you know, for real estate.
Right.
A bunch of loans defaulted, and you know, where are you gonna get the money from?
Right.
Just everybody's credit ruined, and you have all the difference is here that you have an asset, you know, you have a real estate as a collateral, you know, you can resell it, or but the car is it's a losing value asset. It's an asset that is depreciating. So I think it's a bigger loss,
Yeah.
you
It's a
know.
bigger loss
It's a
than.
way bigger loss.
But I've read that car sales are up due to Uber and Lyft. 'Cause
Oh yeah,
people are buying cars and
I'm sure they're, you know, way
people are
higher,
buying fleets of cars
I'm
to
sure
rent
they're
them
higher.
and stuff like that.
but doesn't mean that the value of the asset is higher.
Right? Yeah. No. But that's why I say the hit is not for the car sales.
No.
Unless you're financing, unless you're buy here, pay here, something like that. You're financing that vehicle. But if you're only making the sale,
Right. It's good for you.
yeah, you're just selling the car and you do what you do with that car.
Interesting topic, man.
Yeah.
Honestly. We
Something
want
to
know,
think about.
Yeah, everybody's opinion. Like Ishmael said, we're not financial advisors, but I don't know if
It's our opinion.
If you're financing, if you're buying and financing a car just to drive for Uber and Lyft, I think it's the worst decision you can ever make.
Right.
That's my opinion.
Right. And exactly, maybe we focus the discussion too much into like the financing company, but it's not only that, it's bad for you as the customer.
Exactly.
If you are buying the car, it's bad for you because you're using the car, you're depreciating the car too much. So yeah, not gonna be able to trade in that car.
Yeah.
Ever.
So that's what we have for today, guys. We want to know everybody's opinion on this matter. You know, it's affecting everybody, and it's a reality. That's the main thing. It's a reality, and I think the bubble. I don't know, man. We might see it soon. Who knows? But it is what it is.
It's what it is.
You know, it's a new thing. Well, it's been going on for years, Uber and Lyft. But yeah, the industries, they need to adjust on that matter because their assets are just depreciating way quicker. So let us know your comments, your thoughts on this matter. And we'll see you guys next time.
Peace.
Bye.